Hi, it's Matt Simpson here from FOREX.com, and today I'm looking at the Aussie dollar, a couple of crosses, but starting with some futures and options analysis. Now, it's a bit of a mixed picture on the futures market, but one that could eventually lean bearish. The Aussie has risen for 5 consecutive weeks, but I don't really like how it's a little bit lackluster, and it's still taken 5 weeks to not recoup these 2 weeks of losses. Traders are still net short, although asset managers are gently decreasing their net short exposure. But what's really caught my eye is that gross shorts among both sets of traders are trending higher quite strongly. What's also interesting is that whilst the Aussie has been bouncing, open interest has also been rising, and that could suggest broader bullish initiation overall. But what I keep on coming back to is the fact that it's taken 5 weeks to not even recover these 2 weeks of losses. So I think this might be a bit of a false move. So for me, it's about trying to identify a potential swing high. If you check my prior video, you'll see I did one on the dollar index, and it's interesting to see that we did indeed get a small bounce. We've got some decent support down here from this swing low, the January trend line, and the 200-day exponential moving average. It's found resistance around 100, no major surprises. But for me, given we've seen this significant move to the downside, and as long as we don't get more intervention, I think there's still a chance for this to grind higher, and that could be suppressing gains on the Aussie over the near term. That's a bit of a mixed picture on the daily chart, because you've got a rising Aussie, yet the AU minus US 2-year yield is effectively ranging sideways in a downtrend. That said, it is rising this week, and I think that's kind of tilting odds to an upside break over the near term for the Aussie dollar. But again, when I look at market positioning and put the pieces together on price action, I think we're looking for a bit of a last hurrah before a movement lower. That's my best guess anyway. Also worth noting that risk reversals, which shows the relationship between call and put demand, is actually rising, and that's suggesting that we're seeing greater demand for calls relative to downside protection or puts. So again, near term, it's looking tilted to the upside for the Aussie. Taking a closer look at the daily chart, I like that we've met resistance around the June VPOC, which is the most traded price by volume in June. We had a bullish engulfing candle here, so there's clearly some demand here in a risk environment whilst Wall Street hits record highs. Perhaps we'll have better resistance around 71 cents, and over the near term, I see potential for a break higher, even though we do have a potential double top around this area. So perhaps if we do get a pullback within this range, bulls will be looking for dips. But if you glance up here, you've got 71 cents, you've got this swing high and the monthly R1 around this area. And that might provide better resistance, in which case maybe then we'll get a snap of that bullish sequence on the weekly chart. So at the moment, my bias is for this movement to peter out below 71 cents and pull back towards 70 cents. Now the Aussie yen is interesting because, of course, it's been caught up in the yen intervention moves. It had its most bearish 5-day sequence in 15 months, but found support at both of its 200-day averages, and we've seen this almost sympathy bounce with a bullish engulfing candle. Now, usually I do like these sort of patterns, but when you've got such a significant move to the downside, this just looks like a needed correction against an aggressive move lower. And if you look at left here, we've got a previous MRF intervention level, we've got this swing low, we've got the monthly pivot point around 112 handle, July VPOC. What I'm saying here is there's several levels of resistance for bears to be considering for another movement lower. We know Ministry of Finance have been quite vocal about intervening again, and this time round they've got more clout behind them. So my basic view for yen pairs is that any bounce we're seeing is limited and bears are looking to fade into those moves. It's really a case of identifying potential swing highs and hoping we get those reversal signals. Aussie Kiwi is an interesting one because it is in a downtrend on the daily chart, but momentum is turning higher. But the key areas to look on are 120 and this monthly pivot point, because ultimately we had this bearish outside day close beneath the March low, bullish inside day today, and the Aussie is now rising relative to the Kiwi dollar following the jobs data from New Zealand. But 120 is quite an important level alongside that monthly pivot point, so I suspect that once the headlines are out of the way, I'll be looking for some evidence for a swing high, potentially a movement back towards this low and the monthly S1, which is near the 200-day averages. I'll wrap up on pound Aussie because to me it looks like it wants to continue lower. We had a pretty decent rally into these highs, but several high wicks noted that it just didn't want to test this high previously. Of course, we had a decent move lower, pull back, and now what seems to be a higher low relative to these highs. It's accelerating further away from the monthly pivot point. The next obvious support level being 1.9 around the monthly S1. A break beneath here opens up a run towards the monthly S2, and that swing low should momentum continue. As always, hope that's useful. Wish you best of luck with your trading.